Very excited to welcome back John Polomny, the creator of Actionable Intelligence Alert, a contrarian investing mind that has a good track record, right, John? Uranium. Did you hit the Peabody massive pump? Were you in on that?
Yeah, I was a Peabody shareholder up until about a year and a half ago, but
Yeah.
yeah, I sold out. I bought it when it was in single digits and sold it. Yeah,
Yeah.
it did pretty good.
But yeah, so as far as oil goes, that's had a resurgence. So you've been deep into a lot of those deep value stocks as well, right?
Oh yeah, the problem is a lot of folks come into this biased, okay? And so they'll say, okay, say they're have a bias towards they have a view that man-made climate change is caused by excessive CO2 into the atmosphere. Okay, well, I don't know. Is that true or not true? I mean, okay, that's a separate discussion. The bottom line is that the world uses 100 million barrels a day of oil. We shut the entire world economy down, and that consumption only dropped to about 80 million barrels. That was struck me as very, very interesting. And so when you deep dive it, you then understand about how inculcated hydrocarbons are into a modern society and all the products that they go into and all the processes that they go into. And so if you recall, there was this news headline. I like looking for inflection points, hyperbolic headlines. Oil trades at negative $47 a barrel. Well, this is the time when, contrarians should have been loading up because you were actually seeing things in the media about this is our opportunity finally, to get rid of oil. You can see now, because we've shut things down and we're still surviving. We don't need oil anymore. And I just thought that was so ridiculous. I mean, I go back to the George Soros view is find the premise that's incorrect and then trade against it. And it's incorrect to think in 2020 or 2024 or 2020 during the pandemic, oil and hydrocarbons are what will allow a modern advanced society to function, whether you like it or not. And so it wasn't going away. And so it was virtually buying these companies at giveaway prices. I remember I made a public proclamation. I mean, we bought a lot of companies for pennies on the dollar, and they basically all came through. I think one of the most levered companies we bought was a company called Athabasca Oil Sands. I was buying it for like 15 or 20 cents. And it was one of those things what oil needed to get basically above $65 a barrel for it to survive and cover its debt. And of course it did, and it survived. And I think it's like a $5 or $6 stock. I mean, we sold it a long time ago, but those are the kind of lifetime, life-changing opportunities that do come along occasionally, and you have to be prepared for those. And then you have to approach them in an unbiased fashion. I mean, it goes back even to like on the other side of the coin. When we had the great financial crisis and Mr. Obama was elected as president, I had a lot of people that were right wing or conservative people. I don't like Obama. I don't like this, blah, 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 blah. Okay, well, the Federal Reserve did what after the great financial crisis? There was a massive reliquefaction, liquidity surge into the markets. As a matter of fact, the S&P bottomed at 666. So it didn't matter who the president was because the thing that drives markets in the short term is liquidity and sentiment. And so all that liquidity that came from the Fed, all that stuff. So I think looking at things for the way they are, not necessarily how you want them to be, is how you going to be successful, because we're in this to make money, not lose money. And so there are some things that I am principled on. Like I have a really aversion to like buying tobacco stocks. I just don't want to be involved in a business that causes that kind of problems for people. But I'm not opposed to like uranium or coal. I mean, stuff like that. So it just depends. Some people, if they want to be principled on things, but what I think is a lot of people allow their principles and biases and emotions to guide them too much. And I think if you do that, you're going to cut yourself off from a lot of opportunity. And so, yeah, I think I drifted a little bit from your question, but that's kind of,
No,
yeah.
yeah, it's so true. That's why I'm excited to have you on because there's, I'm sure, lots of areas of the world that excite you right now financially in terms of deep value. And like you said, so you had that track record of finding uranium deep value, finding oil and hydrocarbons deep value. So now we have the US totally indebted. It seems like we're going to have a major debasement in currency. So that's just one backdrop that we have to consider. And then there's different areas of the market. So my first question is with everything that's going on, what areas high level excite you kind of the most right now in terms of deep value?
Deep value. Okay. So this requires a little bit of conversation. So I have a view that the current or the post World War II Anglo-American hegemon is in terminal decline, the US being the basically hegemon of the world. I believe that's in decline. Specifically, why? Because we have this global South and East. You can name the countries: China, India, all those type of countries like that, in Southeast Asia, Indonesia. These have huge populations. People don't understand a country like Indonesia has over 200 million people living there. Okay,
Yeah.
and so Bangladesh has 250 million people. Pakistan has 200 million people. So I have a view that's not, I didn't come up with this idea. I mean, people like Louis Gov and then my friend Scott Osheroff, who runs a Uzbek fund, kind of came up with some of these ideas. What they call the new Fertile Crescent, if you will. This area from basically Istanbul, Turkey to call it Vladivostok in the Russia Near East, and all of that 3.5 to 4 billion people that are in there, that new global East and South, that's going to
Yeah.
be part of that multipolar world.
Yeah.
That's, if you want to call it, opposing the U.S. hegemon. That's in ascent. Okay. And I think that's a tremendous opportunity. And so, I like China is cheap. It's the cheapest it's been in a while, but I won't buy China because the United States is spoiling for a fight with China. But there are other ways to take advantage. I like a country like Turkey. Okay. Um, People don't understand about Turkey is, yes, you have Erdogan, you have inflation, but you have a very dynamic economy there of manufacturing. For example, when I used to go to Ukraine before the war, you get it's right across the Black Sea. There's a tremendous amount of trade there. Like if you wanted to put new windows in, into your house and stuff, this is all Turkish production, appliances, stuff like that. So they are a major manufacturing hub. They have really, very good engineering, and not to the level of Germany or anything, but and they have ties, familial ties and ethnic ties to part of that Fertile Crescent: Kazakhstan, Kyrgyzstan, Uzbekistan, all these places where there's these Turkic populations that are cousins with the Turks. So they have that inroad. So that's a place that I'm interested in. I'm interested in some of the stands. Uzbekistan is a tremendous country. This is a country that 5 years ago was basically closed up almost as bad as North Korea. They had it 5 years ago, or up until I think 3 years ago. Every cotton harvesting season, people were forced to go into the fields out of the urban centers to pick cotton by hand. That's kind of they've made tremendous economic reforms there, got rid of stuff like that. Capital's coming in. They're freeing up their capital markets. It's a population of 50 million people. The population's growing. It's one of the few economies that had positive growth through the pandemic. And so you can look for areas like this. Now, do people say, well, the average person isn't going to want to mess around with this stuff, but I think in a world economy, with the ubiquitous of travel, ease of travel, and communications, and I think it behooves people to expand their circle and make the world your oyster, if you will. And so I think there's opportunities in other places. I like a country like the Republic of Georgia. It's had done these economic reforms 15 years ago, and they've had consistent 5, 6, 7% growth. They've benefited greatly from this conflict in the Donbass because a lot of Ukrainians and Russian money has come into Georgia, and people have moved there to get away from the war or from having to serve or what have you. So this is an economy that continues to grow, is ranked very high in the top 10 in ease of doing business, lack of corruption, things like that. So these things do exist around the world. So but I think my major theme is basically the emergence of this multipolar world, with on one side having this old, decrepit, in decline Anglo-American empire with the Western European vassals in terminal decline demographically, debt-wise, financially, and then this new emerging global South and East, which isn't a perfect world by any means, but has growing populations like in India, and some of these other countries that has capital coming in that, and as these people have gotten wealthier and wealthier, they are exercising political now. They're branching out. It's like somebody that goes from a child to a precocious teenager to a young adult. Going to throw off. No one's interested in just being dictated to anymore. They have sufficiently large economies with large populations, and these countries want to be players in the world. So I think, that's an opportunity. I think all of the raw materials that go into supporting this type of growth in these countries is why I think we're going to have another super cycle in commodities. We're probably in one. And so we can talk about these things, but that's kind of where my thinking is for the next 10, 15, 20 years.
Perfect. Yeah, that is a great kind of setup for like the next question of how to take advantage of all that growth. In my mind, I kept hearing because they're going to need a lot of energy, obviously. What are the deepest value energy sources? Coal right now is a big one. Uranium, supply crunch. What are your thoughts on those two?
So let's start with uranium. Obviously, I'm still bullish on it. The supply demand dynamic, which is driving it, is very bullish. Obviously, it's not the same setup it was 5 years ago, but there's still a lot of meat on the bone, I think. I do think now we're getting past, now we're actually seeing companies come into production. Paladin brought Langer Heinrich on. Encore's brought on their South Texas properties. Are bringing another one on, and so we have to transition our thinking away from pie in the sky, visions of sugar plums, and letting our minds wander with these companies that had no revenues. Now they have to be judged on their operational ability and ability to generate cash flow. So some of these new producers, obviously, you have a ton of developers and wannabes and stuff like that. So I think, from my perspective, what I've done is I sold a lot of my juniors they performed very well. I mean, we had hundreds and hundreds of percent returns. And so I've kind of just moved basically into the ETFs. I think, spreading, unless you're going to be, somebody like Justin Hune, where you devote your life to analyzing uranium stocks. I mean, people need to understand I'm approaching this as a generalist investor. I'm tied to whatever's cheap. I'll take a look at it. So, but I think that, I don't have the time to get into, try to find that. The problem is with a lot of the people is, especially with the social media, I'm going to find that one uranium stock out of the 250 or 300 that exists that's going to go up like, 5,000%. Well, you're probably not going to find that. You probably don't have the ability to analyze the property properly, the management. I mean, how many competent uranium teams are there really in the world?
Right.
Not 350. So, your best bet at this point, I think, is there's still meat on the bone. I think it's going to be a longer, drawn out bull market. I'm not necessarily thinking there'll be a super spike. There may, who knows? But $90 spot or whatever it's at now, you're in a position now where a lot of projects are making sense. You're starting to see people bring production on supply. Economics 101, supply demand, incentive pricing does work. It doesn't fix itself in a year or two, but it's starting to fix itself. We haven't seen the big billion-dollar projects, but we will see those eventually. And so I think the price just keeps creeping up. And obviously on the demand, nuclear power is now, the zeitgeist has completely flipped. I mean, you have the US government now is basically on board with nuclear. I mean, they're throwing billions of dollars at it. You saw the sanctions, stuff like that. And it's the rest of the world's in the same way. I mean, the real growth of the reactors being built, I tell people just go to like the World WNA website and they have a tab on their new nuclear. It has all the news. Hey, they're pouring the foundation for this reactor, or they put the heat steam generator in this reactor, or this one's just went critical. It's just everyday news like that, right? And so you have this constant pull on demand, and the supply really isn't keeping up with that. So we have this gap, depending on who you want to listen to or what research you do, anywhere from 25 to 50 million pounds a year that's growing. It's going to become cumulative. And so I think, you're not going to get the 10 baggers from here probably, but it's a solid, you'll beat the S&P, I think, with uranium stocks over, in a portfolio. Swinging for the fences now and just buying a bunch of crap juniors at 10 cents a share that those days are over with. I think it's more now you got to be a little bit more selective. And I think for the average person, just split your money up. Just buy like, URNM and URNJ, however comfortable you are. Then you get some of the juniors, then you have some of the producers, you know, and you're not having to sit here and devote your life to analyzing, mining operational what's going on at each mine. So I think that's a way to play that. It goes back to this, Elliot. Again, these are businesses. What's the prospect of this business actually cash flowing and giving me a return on my money? Because otherwise it's just speculation. And if you're speculating, and for the average person listening to this, that's fine that if you want to speculate, but understand you're speculating. And when you're speculating that you're going to be able to sell this for a higher price to someone else. That's what you're saying. You're not investing in a business. Langer Heinrich Paladin, that's a business now. It has to be analyzed on its merits. Encore, they have, they're mining uranium in South Texas. It has to be analyzed that way. These other things are pipe dreams, and it's fine to do that, but do it responsibly in a basket.
Yeah.
There's going to be, when this thing finally ends, when everybody's in and this thing, whatever it ends up at from here, there's going to be the story about the, guy that bought, 10,000 shares of XYZ uranium and now it's worth 5 million and he's going to be sitting there, in his, basement, parents' basement. There'll be a thing of it in the newspaper. Just like that idiot that bought Dogecoin and it went up to 5 million that he didn't sell. There's always that's what the media loves, but the average person isn't going to have that outcome. And so
Absolutely.
what we're
Yeah.
trying to do here is compound capital over time. And
Yeah.
so it's appropriate to have speculations if you're situated that way, but if you're just going to go, if you got $1,000 in a Fidelity account and say, I'm going all in on X, you see these guys on message boards and stuff. They know everything about the company. And it's like, okay. And the company continues to issue shares and they've got an excuse for everything. That's not the way to do this. You might as well just go to the casino and just do red and black on a roulette wheel. I don't know what to say. I'm not trying to bash people, but I learned this stuff the hard way. And there's a way to do this. The goal is to compound your capital. Otherwise, just put your money in a Vanguard S&P fund with low expenses and let it compound at 9% a year. If you're going to be active, then be responsible.
Right. That's why I wanted to come back to it because it's such an important point that you're saying. And also, is there a is there something to the fact that interest rates aren't zero anymore? So these companies, like they're gonna have to dilute their shareholder because debt is too expensive. So that's why the ones that actually have a product right now, like you're talking about the paladins of the world, are just like much easier to invest in than the stuff that like is barely getting off the ground. So like that's why these juniors are dangerous. Is that another reason?
Yeah, that goes in for everything. I mean, the hurdle rates in my own business around renewable energy, it's killing it right now. I mean, every goofy idea was getting financed at 0% interest rates, private equity.
Yeah.
I used to do angel investing. Everybody's stupid vanity vodka and, IPA was getting financed. And now, now that you have interest rates are normalized, you have hurdle rates that actually have to be, we got to be able to pay this debt back and cost this much. And this idea, I like the idea, but it doesn't work financially. So you're
Yeah.
exactly right. That's part of the equation now going forward.
Yeah, and it's a huge part for these cash starved juniors. So that's a big reason why they're dangerous. So then I guess do you think interest rates, and this is a hugely important question, do you think interest rates will be higher for longer because of inflation?
So here's what I think. This kind of goes back, I think, to your original question, or maybe we were talking this before you turned it on. uh, we're an empire in decline because we've fallen into the same trap that all the other empires. We got over our skis with debt, okay,
Hmm.
and it cannot be paid back. And so, I mean, I'm not picking on the current administration, but $1 trillion of new debt every 100 days is not sustainable when you have 5% interest rates. Okay, you see the interest expenses going parabolic. We're over $1 trillion in interest a year, which is good if you're, have cash and are getting T-bills, returns. But the problem here is this, to your point, there's only three ways this is going to resolve, that this historically resolves. You can, well, theoretically, because in reality, there's only one way. Theoretically, you can pay the debt back. That's not going to happen, not in a, democracy like we have. People vote for free stuff.
Right.
You can just do an outright default. That won't happen because that would be the end of the reserve currency immediately, and you'd have a I don't even know what would be cataclysmic. It'd be like a meteor hitting the Earth. That's
Yeah.
not going to happen. But you can do a stealth default, and that's what they're going to do. What they're going to do is they're going to ultimately the bond market will regulate this if it's allowed to. Rates will just keep going up and up and up as people say, "Hey, look, we don't trust this government. They're irresponsible. We demand higher and higher rates to compensate us for the risk that we're not going to get paid back, or we're going to get paid back in depreciated dollars." And so what will happen, that won't be allowed to go on for too long. And so I think what you're going to see is ultimate resolution will be some type of combination of higher taxes, yield curve control. So
Mhm.
I think you could see Russell Napier talks about this all the time, and he's right. From a historical, many countries have done this. So what you'll do is you'll see stuff like they'll just put a cap on the long-term rates, the Fed will, and they'll use the trading desk that they have and buy bonds to keep rates at a certain, and the inflation rate will be above the bond rate, and they're basically stealing people's wealth from them, and they don't know it. So they'll keep that going on. Then they could be in a situation where they say, okay, well, the federal government regulates the banking system, the insurance companies, and all that. So we just pass a law, or a regulation or an executive order. All banks, all insurance companies, all 401k administrators, you must have X amount of funds in government long-term securities or something like that.
Right.
Okay. That's another way to steal your wealth. So you're
Yeah.
going to be getting like 3 or 4% or whatever they cap it at on yield curve. And then the inflation rate's running 4.5 or 5%. You're losing them purchasing, they're stealing your wealth. And so that's what they did after World War II, basically. And over a period of time, you can not maybe necessarily lower the total nominal value, but the GDP will continue to grow because of inflation. The number in your debt to GDP ratio will shrink. I mean, go back and look at, you can go to the St. Louis Fed website. It's called Fred. St. Louis Fed runs it. It has all the data. You can go back and look at the federal debt total and as a component of GDP, percentage of GDP, and you can see what they did. You can go back and read the Fed minutes from those eras. People don't do these things, but you'll see exactly what the playbook is, and you can look. And do I think there'll be outright hyperinflation like in Argentina or Turkey or something like that? No, but I think that we will run a higher than normal, like an elevated fever, like somebody has, and they'll just hold the rate down and they'll justify it in some way.
Yeah.
And then the average person really doesn't understand these concepts, and then they'll just be like, okay, whatever. And,
Yeah.
first of all, most of the people don't have any money. They live hand to mouth, more than half the population. And the wealthy people that do understand this, well, they'll be in hard assets and things like that that are going to benefit from this
Yeah.
longer term inflationary impulse, I think.
Exactly. So that's why it's just so important to think about that because your salary is it's gonna be one of those periods where it's like, oh, Big Mac used to be $6, now it's 15. How did that happen over the next
Yeah, exactly.
10 years? Like, but that's gonna be even faster than it's been already.
I mean, I
So
don't eat a lot of junk food, but I got like a Reese's pack. I had like four Reese's. The things are as big as a quarter, man. I mean, they
right.
used to be like
Yeah.
huge, you know what I mean? And there's like, I'm like, what am I getting here? I mean, so you get shrinkflation, the price goes up.
Yeah.
These are to your point, these are the games that'll be played. And the average
Yeah.
person just goes, how's this happening? They don't know.
No, exactly. That's why it's so important to put your money in assets that are going to outrun the inflation. So, so that's the biggest question. I don't know if it's gold. I don't know if it's the S&P 500. It seems like the net, like just like in the Venezuelan stock market, it went up nominally. Like will tech, AI stuff, obviously there's asymmetry in coal. That's great, uranium. But like, what is your take on like the stock market or tech being a hard asset that people chase?
Well, you can even look at the Weimar inflation or Zimbabwe. Yeah,
Yeah.
you're right. The stock markets. The problem is a lot of those places had capital control, so that's why those people had to stuff their money in that to try to buy something. As long as you don't have capital controls, you can go overseas. I mean, you can go right now into like Singapore is super cheap if you want to use that as a proxy for investing in China. I mean, Singapore basically is a Chinese city. Let's be honest.
Yeah.
That's who runs everything there. So it's very cheap. There's a lot of good, well-run companies there. The currency is, stable. I mean, there's different things you can do. I like gold. I think I try to keep things simple. Let's keep things simple for people. I like to have a certain amount of physical gold, precious metals. I mean, I'm with one company that I'm accumulating platinum right now because I think it's historically cheap vis-a-vis gold. I mean, I
Yeah.
still have my heart, you know, what is appropriate for each person, that's for you to determine yourself. But I mean, Ray Dalio says this. I agree with him. I've always had the same view since I was started investing. 5 to 10, maybe to 15% of your assets should be in physical metal that you control, not ETFs, not some scheme with the Perth Mint, coins, bars that you hold that you have control over. And that's your nest egg. That's your fortress of solitude. You've got that. Okay. That protects you against political and financial and social upheaval and malfeasance. That's like an insurance policy. Okay. And it holds its value against depreciating dollar. Then if you want to speculate for capital appreciation into some of these mining stocks, it's perfectly appropriate to do that. I think we're going to have you know, as part of this declining hegemon in the West, we're already seeing. So the worst thing that could have happened historically, I think historians are going to look back at this, was when the U.S. basically kicked Russia out of the SWIFT program and froze their assets. Basically, what they said to the rest of I mean, I've told this story before. Even during World War II and how horrible that particular regime was in Germany, nobody froze their assets. Okay. And so I'm not saying you the morality of what of it. I'm saying when you send that message to everyone else, you sent the message to China, you've sent the message to the Saudis, you've sent the message to India that if you don't do what we want you to do, we will do anything up to and including freezing your assets or sending a carrier battle group there and bombing you. That's the message that's sent, not a message of let's have a discussion about common outcomes and how we can, you know, collaborate and both of us get something out of a deal. It's our way or the highway. And if you don't do it, this is what we're going to do. And once you fired that gun, and it didn't work, by the way, it was designed to collapse Russia and cause a political change there into a neoliberal government that would be sympathetic to the current hegemon. It didn't happen. And so what you see over the last 2 years is record gold buying by foreign central banks, particularly in the global East and South. They got the message. So China's not going to dump all of its treasuries tomorrow, but they're slowly over time, these countries are divesting themselves or not buying, and you see what's happening. And, we just had Thailand yesterday join the BRICS. They applied to join the BRICS. More and more countries and as this thing, it becomes a network effect of its own. And so eventually they will create a competing currency. They will already have created a competing SWIFT type network. It's already happening. So, and the fact of the matter is Western Europe and the United States are not the majority of the world, population wise, or no longer economically. These other countries, 2 years ago, the US and its allies, if you want to call them that, the rest of the world has higher. You have one group going north, one group going south. So you see where this is going. And so I think gold in that environment is a good proxy, I think, to make it easy you don't have to get too cute with it. You know what I mean? And I
Yeah.
think there's going to be I think gold stocks, particularly, I mean, there's some great gold companies out there. I mean, there's some crappy ones, managements, but a lot of the management, I mean, look at the transition at Anglo Gold Ashanti. People should look at it. It's the new management there. They moved everything to Denver. They cleaned up the balance sheet. There's well-run gold company. I mean, you don't have to go buy Newmont. There's well-run gold companies with good projects, with good prospects that will do well, I think, in a rising gold market. And you don't have to go down and buy the penny dreadfuls. Again, if you're inclined and you have the ability and you want to have a portfolio of those, I do, and they'll probably do well. If you buy 10 of them, 3 or 4 of them will probably go belly up. 3 or 4 of them will probably do okay. And then if 2 or 3 of them 10 bag, well, that's what you're shooting for. Coal, look, uh, there's an insatiable amount of demand for a better life. And in order to have a better life, you can, I mean, Gorn and Rosenzweig's done this research. You can go back in their reports. Other people have done S&P Energy. You can look at countries and see what their per capita GDP is. And there's clusters around a typical how many kilowatts of per capita are needed at certain GDP per capita levels. The higher and more wealthier you get, and the more things you use, air conditioners, refrigeration, what have you, you need more energy inputs. And so I've always said this: we have contrary to people believe, we have a shortage of molecules in the world. And what I find fascinating about coal is that it doesn't really matter what happens in the US and Western Europe and the rest of these countries that are getting the vapors and going to their fainting couch over CO2. It matters what's happening in Africa, where the average person doesn't even use as much electricity as the average American's refrigerator uses a year. Okay. There's a billion people or more in the world that have never flipped a light switch on. You see where this is going. Okay. They're not going to be doing it with solar and wind farms. They're going to be using coal because you can build a coal plant in a year and a half or two. Coal's easily transportable, storable. It's easy to use. Okay. Is there environmental issues? Yes. You get, sulfur dioxides, you get mercury, you get other metals. The technology exists to deal with that stuff. Um, if people consider CO2, well, what about CO2? CO2 is not a pollutant. It's a life-giving gas. And stop, not going to discuss it. Go back to high school biology. Go get a biology book from, the early 1980s and look up photosynthesis. You'll understand what CO2 is. So that's where they're going to go, because I think the Minister of Energy for India said it very well. Some snooty, snobbish, one of these bimbo interviewers was asking him on Bloomberg Asia one time, like, how dare you buy, why are you buying Russian crude? And he said, well, I have 1.4 billion oil consumers in India. And if I can buy crude from Russia for $50 a barrel when the world market is 75, then I have a responsibility to my Indian consumers.
Yeah.
And stop. That's the end. Doesn't matter what I think about it. Doesn't matter about the morality of the Don boss. That's the reality for the Indian government. And the fact that they are industrialized and the people want a better life. And until we come up with some other technologies, oil is easy to use, refine, has many uses. That's why people use it, not because they're greedy and want to destroy the earth, because it's useful. And, you got to remember something. This is something I tell people. Think about a gallon of gasoline, what it can do. A gallon of gasoline you can put into a vehicle. You can put 5, 6 people into a vehicle or more if it's a Tahoe or something. And you can go, 30 miles, 40 miles with all your stuff, 5 people or something, with a gallon of gasoline that costs $3 right now. 200 years ago, 150 years ago, even 100 years ago, most people on Earth never went 30 miles away from where they were born. Think about the use case, the independence, the liberation, the economics of that, okay? And it's amazing. That's why we use it. And so I think that everything that we have and enjoy here that we take for granted, everybody else in the world wants. And I would suggest that people that don't understand it should travel to these places and ask people in those countries what they think about climate. They'll just laugh in your face.
Right.
So what are you talking about? I mean, so I think there was a guy, I forget his name. He's a Russian immigrant here. He gave that talk at Oxford, I can't remember the kid's name, but he was talking about this, this is not, climate change is what concerns people in poor countries. Not being poor basically is. And so I think there's an insatiable appetite for molecules, and there's been an underinvestment in these molecules. And I think that's an opportunity. Is it a linear, straight up thing? No. It's a secular trend that will go on for 10, 15, 20 years in this super cycle. And they'll be punctuated with cyclical declines here and there. But those are your opportunities to buy. So,
Right. Right. So deep value in the coal and oil stocks, or I mean, coal seems dirt cheap right now. So the company. So is that
yeah,
a
I mean, and then you have the interesting thing around coal being, I like a management like Glencore, because as everybody's selling off all their coal assets, Glencore keeps buying all these coal assets because they get the fact that they've always been a little bit rogue like that, but they get the big picture. We're not playing to everybody's political. I mean, these are legal products that have a use case, and we're
Yeah.
going to provide it. And the other thing you have going for you is these Western governments and banks and insurance companies. Nobody wants to finance coal mines. So your ability to ramp up coal supply is not as great as it used to be. Now, I have no doubt that Russia, China, other countries will finance this, but you get my point. It's restricted on, you're not going to open another coal mine in the US. Good luck with that.
Right.
So, but that doesn't really matter in the scope of the world. And so you see these companies, like you see the current merger, BHP going after Anglo American, for example, right? So BHP wants the copper assets that Anglo American has. And so whether Anglo American divests pre-merger or after, I mean, it's the same thing that happened, I think, when it might have been Anglo American. They spun out Thungelia, the South African coal mining assets that were selling for less than a dollar or one PE, and the return on, because no, when those shares got spun out to managers that have ESG requirements, they can't own it, so they just dumped it. There were forced
Right.
sellers, and so you were able to buy these things at dirt cheap. The company continued to mine coal, continued to sell it, continue to cash flow, and then it subsequently has had like 500-600% returns. So those opportunities like that out there, and
Right.
those will continue to happen. And again, you have to determine what's the premise that's incorrect. But then again, uh, you got to call your shots. These are not never these are cyclical businesses. They're never like I just buy and hold them. You don't want to do that. So you got to understand the cyclicality of the commodities of these markets and try to buy them when they're down and then when they catch the upswing. Same thing, coal. You talk about thermal coal for power generation, but there's also, met coal for using coking coal that's used to make steel. That's not going away. And rust is your friend, right? Because you're constantly going to have to replace the steel and steel demand and all that. So you're going to need this coking coal. I mean, I know there's some wag on a commented to me once, well, they have this process in Sweden that, they're going to use hydrogen and us. Well, good luck. As soon as you commercialize it and get the price down, people will stop using met coal. Until then, met coal, I mean, look at the returns like for Alpha Resources. I mean, if you would have bought it at the right time. So
Well, a lot of the coal, because Alpha Resources keeps buying their own stock, and there's no one.
exactly.
Yeah, and so a lot of these coal companies are super cheap in terms of PE, and they're cash flowing, and there's this generational kind of bipolarization of growth over in Asia. So it seems like a good long-term investment, especially because the mines where a lot of it's coming, like from Australia and America, you're right, are getting scarcer and scarcer, right? So
And I think you hit something on the head there. A lot of these managements have realized, okay, if we can't get any traction in the market with our cash flows and stuff like that, then we'll just buy ourselves. And that's what they're doing. If nobody else wants to buy the stock, we'll buy it. And if I like cannibals like that, they're buying their own stock, because if I'm a share owner,
yeah.
every time they buy back shares, I own more and more of the company. And so that's the way to look at it.
Yeah, exactly. Wow, that was very comprehensive because we're looking at the big picture. People need to protect themselves by putting their quickly depreciating capital somewhere safe. And so we talked about gold, we talked about coal, we talked about uranium, we talked about taking advantage of the massive growth over in Asia. So is there anything that we missed that you wanted to cover that excites you currently in the world to invest in?
I mean, I wouldn't say this is long term, but I mean, I'm really shocked at, like, go look at the charts at some of the European banks, Barclays, Commerzbank, Unicredit. I mean, look at the charts; they're going straight up. They broke out. These are banks that basically, and the only reason I know about this and got turned on is because after Cyprus had its thing back in 2011 or 12, whenever it was, I bought a lot of shares of Bank of Cyprus, because what happened was, they basically became the biggest bank on the island. It's a duopoly. They cleaned up the balance sheet, and a lot of these banks are the same thing. They didn't do anything for 10 or going on 12, 14 years. They just basically sat there, cleaned up their balance sheets. Nobody was paying, not making new loans. And now they've got things under control. In the case of Unicredit, which is an Italian bank, uh, I mean, they've got some new managements. Barclays has turned around, and these things are like, so what do they have? Excess capital. So what are they doing? Buying back billions of dollars, of stock. And
Wow.
so, you look at net interest income because rates are higher now, even in the EU. They're probably going to cut rates in June, but start a rate cutting cycle. But it's like, don't be afraid to look at things. Don't just write off and say, well, Europe's in terminal decline, but there's always an opportunity everywhere. The UK right now has tremendously cheap stocks, and there's a merger and acquisition wave going through there. Okay. Even if places are not the best, I mean, it's like, okay, I said the same thing like in Cyprus when it went through its situation. It didn't dry up and blow away. It wasn't going to disappear. There were still going to be Cypriots there. All the buildings were going to be there. There were companies there on the Cyprus Stock Exchange that had most of their earnings were derived from overseas activities, but the baby gets thrown out with the bathwater. And you had it like Logitech, for example, the people that make your mouses and stuff. I think they're based there. I mean, they don't sell anything in Cyprus. Everything is overseas, and they did fine, but the stock got cratered because everybody just sells everything, right?
All
Throw,
right.
sell, get me out, and then so these opportunities are. I mean, the Coca-Cola bottler there was very cheap, and so you got to look at things like that. When something blows up completely, look at it because it's like, okay, the place isn't going to dry up and blow away. If there's I sold out of Argentina maybe too early because I didn't think Milei was actually going to get elected at the end, but he did. And he's actually been very good at, some of the reforms he's doing. If he can get the reforms through before people run out of patience, you got a chance there. And the stocks, they're a front running that. They've already been up quite a bit. So there's always, I always keep my eye. I'm not doing anything there, but I keep my eye on Venezuela. I keep my eye on North Korea. Eventually, these things happen to change. And then, I know a guy that learned Korean just because he was preparing for when this day comes, he's going to go in there. You see what I'm saying? So I'm not the average. These are not actionable as we speak, but that's the mindset I think you have to have. Just because if something's down 90%, I want to look at it at least be like, what's going on there? Does it have a chance to inflect? Does it have a chance to, whether it's a country, a company, an industry, what have you?
Oh, absolutely. Especially at a period where, like, I think Nvidia is like three times the entire German stock market or something like that. So, like, Europe's just crashing, and it's like in a environment where currency's debasing, the value of Mercedes or BMW or some of the other ones will have to just like, offset at least the debasement of the currency, you would think. So,
Let's talk about Mercedes, okay? People didn't understand the subtle shift that's happened there. I mean, it pays like a 10% dividend, okay? It makes money. And if you go and look at their recent presentations, they're backing away from the ESG now. They understand, you know, you go look at some of their recent presentations. They're still going to make EVs, but this thing where they were going to stop making ICEs by 2030, that's all got shelved because, again, when you see these, it's like this famous economist I used to listen. He used to work at Bank of Montreal. His name was Don Cox. He was a historian by trade, and he used to have these weekly market commentaries. Somebody gave me the access number for the calls, and I used to get on there every Friday. And he would always say, don't look at the page one story in the newspaper because that's already known and been acted on. Look at the page 16 or page 20 story that's making its way to page one. That's where you want to focus.
yeah,
And because, if it's on page one, the average person, I
right.
mean,
Too
what
late.
do markets anticipate? They don't, you
Right.
know. So
Exactly.
I guess I would leave it at that.
Yeah, no, that's awesome. Well, that's why we need actionable intelligence alerts. Like it's a crazy environment. I don't have time to look at all these different emerging trends, so that's why it's super helpful to have you on and to have your actionable intelligence alert service. So thank you for that.
Yeah, no problem.
Yeah, so where can people go to find you?
YouTube, just look up my name on YouTube. I have a weekly video, and then I moved the whole thing to Substack. I have a free weekly newsletter that comes out that talks about this type of stuff. And then I actually have a paid product that kind of gives you, actually companies that and ways to speculate and invest in these themes.